Welcome back. We're counting down to the Union Budget 2023. What does India Inc. want from the Finance Minister? Here's the top leadership of CII with their wish list. Sanjiv Bajaj, let me come back to you with one of the key expectations, or perhaps even a fear within the market, that could the government make changes as far as the capital gains tax regime is concerned. What's the expectation? There has been the call for parity across different asset classes. We don't know whether this is going to be the budget that the government decides to do something about that or not. In his last conversation, the former Revenue Secretary did suggest that there wasn't enough by way of consultation that had happened on the issue. So there's a question mark there. What's the industry expectation?
See, very clearly, Shereen, by rationalizing the capital gains tax structure further, we're just moving ahead on ease of doing business. And this is very important as we are expecting new investment to come in across multiple asset classes. So today, if you see, there is no consistency in tax rates for holding periods for different types of instruments which fall within the same asset class. Even the indexation benefits differ in different situations. And we also know that tax rates differ for residents and non-residents. Now, keeping in mind the significant amount of capital we need to attract in India, both domestic and foreign, for the next many years to upgrade our own nation towards a developed country, we have to ensure that we simplify all these different rates and structures so that we are able to attract this investment across asset classes. That is the main focus from CII.
Yes, that is the main focus and one of the recommendations. Let's see whether this is going to be the budget that takes that forward or not. But Sanjiv Puri, coming back to you, and there was a lot of conversation that we've had so far on what the government can do to try and ensure that the rural economy sees a pickup. And you are hopeful that there will be a turnaround, and you're seeing visible signs, green shoots at this point in time. But on balance, where is it that you're still seeing pain within the rural pockets as well? The expectation, again, is that as far as the NREGS allocation is concerned, like we saw in the previous budget, there will be an increase there. But what more would you like to see happen on that front? And specifically, where exactly is the pain that you are seeing as far as the rural economy is concerned?
So if I was to just step back, Shereen, the cause of a tepid consumption in rural has been really inflation-induced. And farm realizations have been better, but the input costs have also gone up. And whatever the consumer was buying, it was more expensive. So that's been really the issue. I think inflation is cooled off. I think the farm incomes are going to be a positive. And as I said, also the commodities for the inputs as far as farm is concerned are also cooled off. So net is getting better. Now, what else can be done? I think certainly the points have already been made. It's more about how jobs can be created. So how do we leverage tourism for rural economy? We focus the infrastructure investments in the rural economy. I think how do we progress on the strengthening the competitiveness of the agri value chains? I think these are important, and this will certainly strengthen rural economy. And I'll just add to that, rural economy is certainly agriculture is a big component. So it is also something that is very vulnerable to climate change. So we certainly need to press the accelerator on building resilience in the agri value chains. A lot more focus on adaptation is required. A lot more investments in research for developing more resilient varieties are required, whilst through the induction of technology and through digital mechanisms, we educate the farmers on the best practices to build resilience. I think these are essentially the things that are required to be done. Now, I'll also add to that, the steps that have been taken in the past of taking whether it's a water connection or sanitation or whether it's the electricity connection to the last mile. I think all these are actually empowering the rural community. So those steps also need to continue, so that people are experiencing much more empowered than they are today with all these facilities, and therefore productivity improves. Infrastructure should focus on the last mile connectivity to the rural areas. I think all these will provide impetus to the rural economy.
Mr. Dinesh, let me address the issue of the defense budget, because globally what we are seeing at this point in time, given the sort of geopolitical situation, is that defense budgets have seen a significant hike. What's the expectation? Last year, there was a 12% increase as far as the defense budget was concerned, but under 50%, and I'm looking at the numbers, under 50% of defense capex has been utilized so far this fiscal. What's the expectation on defense? And outside of that, some of the areas of focus, for instance, climate, renewable energy, do you expect those to be front and center in this budget?
Yes, I think from a defense perspective, I think the government has been very clearly focused on making sure that the India focus, or I would say for sourcing from India, is made. I think that's something which is genuinely a strong focus, which we are very much supportive of. We believe that will make a big difference for us. And I don't expect that defense spending is going to come down. And this presents a huge opportunity, not just from an Indian industry perspective, but also to make sure that we are self-reliant from not just weaponry, but also the various support activities which the defense is looking at. I think there will be a focus on the tooth-to-tail ratio, meaning making sure that the maximum spend is for the benefit of the immediate requirements of the defense forces, rather than the backside of the activities which normally take place. But having said that, I think the opportunity from Indian industry, and I would call it the focus on self-reliance, is something which we will continue to look forward to from a defense perspective. On the overall, sorry, I missed the second part of your question, Shereen, if you don't mind repeating that.
I was talking focus areas, renewable energy, the climate transition. These have, of course, found favor in the previous budgets. The hydrogen mission, of course, has been announced ahead of the budget. What would the expectation be on some of the other key focus areas?
Thanks. I think, yes, that's perfect. Actually, I would say India has really done even better than what the rest of the world was expecting us to do. I think the clear message has been sent that we are going to be focusing on the targets which we have set, and that we may even exceed the speed at which we are going ahead. I think from a renewable energy perspective, I think the focus and the various plans which have been drawn, not just for, again, making sure the components are being manufactured locally and also the assembly take place here, has been a significant benefit, both from creating infrastructure and also the investment side. On the climate side, I think already Sanjiv Puri mentioned that I think there are various actions underway, and I'm seeing or expecting that there will be further focus and investments being made from the government side to speed up that. I would say from a private sector, we are very much comfortable working with the government on this, because we see huge opportunity, not just to be investing in India, but also creating the right infrastructure to make it for the future as well.
Yeah, Sanjiv Bajaj, I want to come back to you. Do you expect the government to lay out a roadmap as far as some of the key incentives and subsidies are concerned? For instance, the demand from industry has been that given the pandemic, etc., that 15% concessional tax rate, there should be another 5-year window that the government provides just to give predictability to both domestic investors and global investors. Do you see that happening on some of the other crucial incentives or subsidies, like the FAME subsidy for electric mobility? The sun sets in 2024. Do you believe that this budget may articulate a roadmap for some of these key incentives and subsidies?
I hope we see that, Shereen, because it's equally important that we start getting away from subsidies, especially the non-merit subsidies. And that's why subsidies that you have mentioned, whether it's for FAME, whether it's for investment in a cleaner environment to attract new investment in CapEx, for which the extension of that 15% tax is something that has been requested. These are all towards productive uses, and they will help us with growth, they will help us with jobs, they will help us with revenue. And we have to be real about the fact that the pandemic has resulted in private sector CapEx not coming in the way it should have. But I'm hoping that we are towards the end of this pandemic. It certainly looks like, but I don't want to jump too early on that. Externally, we are hoping that by the second half of this calendar year, the growth from China starts impacting positively world growth. And it's only the Europe situation that needs to come back into positive movement for growth. But overall, we believe that the world economy and India in the coming quarters can start moving towards new investments for higher growth and demand. And to support that, these merit-based subsidies, where they help spur new investment, should make a big difference.
Well, Sanjiv Puri, all of you have talked about the need for the government to continue to do the heavy lifting as far as capex is concerned. A 36% higher allocation is what we saw as far as capex goes last year, and the expectation is that the government will replicate that. But what about the private sector? Do you have any indication that we are going to now start to see the private sector engines firing when it comes to investment?
So I think the mood is certainly very positive. I think there is a great conviction that the worst is behind us. And the recent survey that happened amongst the members of CII also shows positive sentiment. And as we know, capacity utilizations have picked up. I think we must also keep in mind that the capacity that industry had put up prior, although that time also capex was a little weak, but had put up, they were meant for the periods during which COVID happened. So it's only now that capacity utilizations are coming up and they are beyond 70%. We are already seeing green shoots of investments in chemicals, in metals, heavy machinery, and I also can tell you in the sectors that we are in food and beverages, we are seeing investments. And so it is starting to pick up. Capacity utilizations are up. The challenge that we face at this point of time is more a global headwind. And with, as Sanjiv alluded to, I think in a couple of quarters or so, I think things should get better. So that also should help us move on further. But certainly it's very, very much picking up. And the mood is positive.
Thanks very much, Sanjiv Bajaj, Sanjiv Puri, Chandrajit, Banerjee, and our Dinesh for joining us here on CNBC TV18 with what India Inc. wants from Finance Minister Nirmala Sitharaman.